Over the last several years, Bitcoin has become increasingly popular amongst today's investors. During that same time, there's been a lot of debate about Bitcoin and other cryptocurrencies. Its proponents argue that it's the future of currency and investing, while its detractors argue that it's a risky investment option that may not generate big returns. To better understand its true value in the marketplace, we must look to its latest movements. Most recently, Bitcoin's valuation has increased more than 763% in just 1 year, easily outpacing traditional gains in the stock market. More people are buying into Bitcoin becoming a decentralized global currency. One tailwind in particular is the acceptance of Bitcoin by several high profile individuals and businesses. Elon Musk, the mind behind both Tesla and SpaceX, recently announced his automotive empire would not only purchase $1.5 billion in Bitcoin, but it also intends to accept the cryptocurrency as payment in the future. Several popular fintech companies like Square and PayPal also announced their intentions to support cryptocurrencies moving forward. Despite all of that, however, the most important development for Bitcoin may be the recent IPO of Coinbase Global and today's leading cryptocurrency exchange platform. There is no doubt Bitcoin is gaining momentum. Recent developments have contributed to the sharp rise in the value of Bitcoin, and asset proponents believe this is just the beginning. So, what exactly is Bitcoin and how can you determine if it is the right investment for you? Read our beginner's guide on investing in Bitcoin. What is Bitcoin? Bitcoin was created by a programmer or group of programmers using the name Satoshi Nakamoto, but the real creator of Bitcoin is still unknown to the public. Bitcoin is one of the most widely used types of cryptocurrency. Virtual coins or tokens are used in a cryptocurrency system instead of physical cash. Coins have no intrinsic value and they aren't backed up by gold or silver. Bitcoin was created to solve a couple of big cryptocurrency flaws. First, it was designed to prevent crypto coins from being fraudulently duplicated. Think about how easy it is to make copies of your computer's data, documents, photos, files, etc. Cryptocurrency wouldn't be possible if anybody could duplicate a coin and create an unlimited amount of currency for oneself. You can't just make copies of a $20 bill, right? Likewise, there's a need to prevent people from reproducing crypto coins. Understanding blockchain technology, Bitcoin uses a digital technology called blockchain, an advanced coding mechanism that disperses a single code over thousands of different computers. For example, let's say that your coin is built from the code XDA 146DDS. Blockchain segments the code into smaller pieces and stores the pieces of code across many computers. If a hacker wanted to access the code, they'd have to hack various computers to access the entire code. Blockchain also employs a public ledger, which uses thousands of computers to keep track of coins and their owners. If a coin's data is changed, the nodes will cross-reference their records to verify whether the change is accurate and that the coin's owner initiated it. Would you like to start investing in Bitcoin and other crypto assets? Take a 60-minute online training course to learn how to start your portfolio today. What is Bitcoin used for? Once you buy a coin, you can use it for online transactions wherever it is accepted. Please note that coin transactions do not withdraw real money from your bank account. Money leaves your bank account only when you buy the coin itself, not when you buy with coins. Like cash currency, the value of a coin may fluctuate. That's why some investors are getting excited about Bitcoin and other types of cryptocurrency. Investors speculate that Bitcoin's value may rise significantly if there's a surge in the market. I'll explain the arguments for and against cryptocurrency investment later on. For now, investors should pay special considerations to the rate by which Bitcoin and other relevant cryptocurrencies are being adopted. Not unlike traditional equities, Bitcoin increases in value when more people are interested, and more people are interested in buying Bitcoin today than ever before. Whether it is pure conviction or an inherent fear of missing out on what many predict to be the greatest transfer of wealth in American history, trading volume continues to increase exponentially for the better part of a year. In fact, Bitcoin trading volume has steadily increased. As a result, Bitcoin is regularly testing new highs. What do you need to invest in Bitcoin? You don't need much to invest in Bitcoin. All you need is personal identification document, bank account information, secure internet connection. Remember, if you buy coins through a stockbroker, you may not need to provide any personal or financial information. File How to invest in Bitcoin in 5 steps. Are you ready to dive into cryptocurrencies? I was lucky because buying Bitcoin is easier than I expected. How to invest in Bitcoin in 5 easy steps. Join the Bitcoin Exchange Gate, Bitcoin Wallet link, wallet to bank account order, Bitcoin, manage Bitcoin investment, participate in the Bitcoin exchange. First, you need to decide where to buy Bitcoin. Most Bitcoin investors use cryptocurrency exchanges. There's no official Bitcoin company because it's an open source technology, but there are several different exchanges that facilitate Bitcoin transactions. These exchanges are the middlemen of cryptocurrency investing, like a stock brokerage. If you decide to purchase from an exchange, you will have to decide which exchange you want to buy from. Here are a few of the most popular options. Coinbase, a very popular crypto exchange that ensures losses in the event of a security breach or fraudulent transfers. Binance, founded in 2017, Binance is a crypto exchange with a strong focus on altcoins. Kraken, this San Francisco based exchange allows you to invest in Bitcoin using various currencies from around the world. Gemini, launched in 2015 by Cameron and Tyler Winklevoss, Gemini. Bitcoin. Many experts believe that Bitcoin is a bubble. In short, Bitcoin is overrated and can crash at any time. The value of Bitcoin fluctuates. Similarly, there is a tendency for significant price spikes and price declines to occur. Bitcoin is completely digital. In short, it is more vulnerable to security breaches than tangible assets. Real estate. Real estate is an investment backed by strong historical records and real estate security. Rising house prices and rents are a good inflation hedge. Depreciation. Utilities, insurance, and repairs all allow real estate investors to qualify for valuable tax benefits. Rental properties provide consistent monthly cash flow you can rely on. The pros of Bitcoin investing. The main benefit to Bitcoin investing is that you may be able to generate a huge return on profit, perhaps as high as 200% or more. Of course, that's a challenging thing to accomplish, but it's possible. If you purchase a large amount of Bitcoin, you may be able to capitalize on a market surge and sell your coins for a much higher value when there are lots of buyers. We also hope that Bitcoin is unlikely to actually become a future currency or a more popular trading asset and will see returns from long term holdings. However, it should be noted that the value of Bitcoin generally drops every year. Your success may depend on the right market timing, that is, buy coins at a low price and sell them at the highest possible price. Risky investors who are closely watching the market have the potential to achieve enormous profits with this strategy. You can even achieve returns that are unlikely in the world of corporate stocks and government bonds. That's why Bitcoin is incredibly fluid. According to Sean Heng, Vice President of Growth and Operations at CoinMarketCap, Bitcoin is one of the most liquid assets of any other cryptocurrency. As a result, realization is almost instant. It can be realized. Disadvantages of Bitcoin investment. Unfortunately, Bitcoin's high volatility makes it a dangerous investment and you can lose money if you're not careful. Depending on how much you've seen about Bitcoin in the last few months, it seems to be one of the best investments, says Jim Pendergast, SVP of Outline. Current Bitcoin and other types of cryptocurrencies are also at high risk for pump and dump schemes. Predatory investors approach amateur or humble investors and persuade them to invest large sums of money in Bitcoin. Due to the resulting surge, Bitcoin prices will rise rapidly. Predatory investors are smart and sell all their holdings before the end of the buying wave and make huge profits. However, when investors stop buying, the value of the coin becomes very low. A coin bought for $200 could eventually be worth $30. Ignorant investors will throw away their money. You can always make a profit by selling coins before the price goes down, but it is impossible to predict when the surge in purchases will stop. Prices can drop by 50% in a few hours. For this reason, volatile assets